With the spring buying home season fast upon us, this week's video is a quick look at some common credit myths and misconceptions. Myth or fact, everything will drop off after 7 years. Most people commonly believe that just leave it alone, don't pay it. After 7 years, it will go away. It's the statute of limitations. That is false. There are specific time frames for different types of credit issues or inquiries as far as when they will, quote, drop off. Very quick look, hard inquiries, 2 years, but typically mortgage lenders only look at the last 120 days. Any sort of late payments, foreclosures, short sales, collections are typically 7 years. That's the same with Chapter 13 bankruptcies, Chapter 7's 10 years, judgments, 7 years, or until the statute of limitations runs out, depending on which is longer. Unpaid taxes, unpaid student loans, indefinite. They don't run out there until they're actually paid or 7 years from the paid date. Myth or fact, when you pay for your Experian credit score, you're getting your credit score each month. That's also false. In the mortgage industry, we use 3 highly specific mortgage scores that are required federally, each from TransUnion, Equifax, and Experian. They use a tailored algorithm that is specific to the mortgage industry, which is different from the auto industry, different from the insurance industry, different from consumer credit card industry. Myth or fact, disputing items on your credit report and getting them deleted is a solution to all collections. Another false one. What happens when you dispute a collection is you initiate the dispute, it's turned into a code, which is then sent to the collection agency, which gets it. They typically won't even see any remarks that you might put explaining what the collection was about. And they'll in turn create another code, which is sent to the credit bureaus. From there, the bureaus are going to update based on what the creditor says, not on what you, the consumer, says. And the onus of proving that it is incorrect is going to be on you. Another myth or fact, paying collections will increase your credit score. Of course, paying off debts are a good thing. Assuming that paying a collection is going to increase your credit score is a common thought. Another false myth, paying collections is a good idea. However, paying off a collection will not remove the collection. It's still going to be a mark on your credit, and it will take time for that payment to be associated with an improvement in credit score. Myth or fact, credit repair companies can help me. Credit repair companies typically offer to help settle your debts, improve your credit score with a one-time fee or more frequently a monthly fee. Another false one, credit repair companies are going to typically tell you to stop paying your debt, which is not a good thing. They're going to then dispute them with the creditors, getting a potentially masking of the derogatory or the collection on your credit report, which is a short-term improvement potentially in credit score. However, once it's disputed by the creditor and it is actually then reported back to the bureaus, it's just going to bring the score right back down. And everything that the consumer or the credit reporting, everything that the credit agency is doing for you, the credit repair agency, are simply things that you as a consumer can do yourself for free. In conclusion, education and action are the keys to better credit. There are no shortcuts to a great score.